The Hype token is the fundamental asset of the largest decentralized perpetual futures exchange. So that's a platform to bet on rising prices or on falling prices using leverage. Now, unfortunately, highly speculative investments aren't that much thought after if the market looks like this. Everything is going down. The question is, when everything is depressed now, does it potentially make sense to buy the dip, especially for Hype, because Hype has sold off more than the rest? Now, what we see here, that's the trading volume across all perpetual futures exchanges. The industry as a whole has grown massively in the last years, but it seems like recently that growth is stalling. And you probably know why. On the 10th of October, we had massive liquidations, but more on that in a second. Here are all decentralized perpetual futures exchanges. Hyperliquid is a multiple times larger compared to other similar platforms in terms of open interest, but also in terms of trading volume. Open interest is the amount of bets that are currently on the listed tokens. This here is the 10th of October. This is an hourly chart and it shows the market cap of the altcoins that are not in the top 10, also called others. The reason for this massive price collapse with subsequent recovery was a cascaded liquidation event. So everybody uses leverage on the perpetual futures, 2x, 3x, 4x, and if an asset goes down by say 10%, then the most risky of the traders, let's say one that has 10x leverage, has to sell everything. That selling then spills over to the spot market, pushes the price further down, and then the trader that has maybe only a 5x gets liquidated as well, because then suddenly the price dropped by 20%. When the 5x trader gets liquidated, the price falls further and further and further. So we have a cascading of liquidations leading to a price drop like this. And that was even amplified by Binance changing its pricing mechanism. So in the past, Binance used several data sources to figure out its prices. It then changed over to just its own order book. That made things less liquid. That caused even quicker liquidations because of higher price sensitivity. Now, even if you didn't 100% understand what I just said, what you need to know is that even the least risky of the short-term traders, they all got liquidated because of this very quick price drop. If you even had just a 2x leverage on your bets, you lost everything. And that's fundamentally the reason why the perpetual futures exchanges have trouble growing past the 10th of October. This is now on a weekly chart, right? The trading volume on the perps. It peaked in the week of the 10th of October. Let us compare those different platforms. How have they been impacted by that event? What you've got over here, that's the total value locked. So the capital that's locked up in Hyperliquid. It went down from 6 billion to roughly 4 billion. Here we've got the second largest protocol. That peaked at 2 billion, is now down to 1 billion. The reason for this quick change in total value locked was an incentive program, an airdrop program. So many traders simply went one direction on, say, Hyperliquid, the opposite direction on Aster protocol, basically balancing out the entire position and then farm airdrops in the meantime. When the airdrop point farming was closed, that's also when the TVL or the capital on Aster protocol started to shrink again. So this was an artificially inflated growth path. What we've got here, that's the lighter protocol, also rather on the decline recently. Here we've got EdgeX, that's also not growing since November. And here we've got Gravity. And Gravity is the only perpetual futures exchange that continues to grow. And that's one of the reasons why I like that platform. That's one of the reasons why I've also launched a trading strategy, a copy trading strategy on Gravity as well. The vast majority of copy trading happens on Hyperliquid. So this is where premium members can just deposit their money and I trade with that money. But I've also now just recently opened a strategy on Gravity. And I'll talk about this in a second as well. But yeah, the problem is that the leader in the industry, Hyperliquid, is not growing anymore. And that fall from 6 billion to 4 billion, it's reflected in the Hype price development as well. This is Hype relative to other altcoins. It went down by 44%. And I believe that the reason for that decline is not just people withdrawing from perpetual futures trading after getting liquidated on the 10th of October. I believe part of this is, of course, increased competition, but also the tokenomics, as in there's more Hype tokens now floating around. Because here's the thing, everybody that creates a crypto project wants to cash out at some point. And the team started cashing out recently. The first unlock happened in November of last year, and now we see gradual continuous unlocks going forward. And that then begs the question, will we see continued selling because the team and the insiders and the early investors continue cashing out. Potentially, it's always a question of supply versus demand. One source of demand is, of course, staking. Now, nobody stakes for the APR. The APR is 2.25% per annum. Hype is so volatile, this is not enough of a return to justify staking. The reason why people stake Hype tokens is a reduced fee structure. So if you've got 100 Hype tokens staked, you get 10% discount on trading fees. So depending on your trading volume in the last 2 weeks and depending on how many Hype tokens you have staked, you get either the full price or a discounted price for trading. And so that's a potential source of demand as well, right? If you stake your Hype, that Hype gets out of circulating supply. That of course pushes up the price. Now the issue is that this demand for that staking only goes up if trading activity goes up as well. If you exit the platform, then why stake Hype tokens? And we have seen how trading volume has already spiked and how it's very hard to recover. So I don't see the staking program going to offset the newly issued tokens. Rather the opposite. There might be tokens getting unstaked and added to the circulating supply. Add on top of all of those effects that the market is getting more and more scared, is getting more and more conservative. If everybody got wiped out, that used just a little bit of leverage, and if most altcoins underperformed Bitcoin in the last year, there's more and more move towards becoming Bitcoin maximalists. It's the Bitcoin maxis that got rewarded last year. And there's a good chance that the Bitcoin maxis will get rewarded in 2026 again. This trend of Bitcoin becoming a more and more important part of all of crypto started in August of 2022. And it will likely continue. The trend looks quite healthy. And so Hype relative to Bitcoin is likely going to continue to underperform. It has already underperformed from the peak by more than 50%. Bitcoin going up, relatively speaking, the supply of Hype going up as well. I think that justifies that Hype could very much continue on its unfortunate path down. Again, there is more and more competition as well. And one competitor is growing very quickly. Of course, Gravity is only at 100 million so far. But yeah, the strategy that has been launched on Gravity that I'm managing is a moving average long short strategy on Ethereum. So you bet on falling prices whenever Ethereum is below its best moving average. We bet on rising prices whenever it's above. And when we run back tests, then we find out that the 34-day simple moving average historically worked the best. While in general, the approach tends to outperform buying and holding for the vast majority of durations. So if we just go 1x long and we go 100% in cash whenever we are below the moving average, we get this kind of performance versus buying and holding Ethereum. Once we also add betting on falling prices, we get this performance. And once we add some optimal leverage, we get this long-term performance. That's the back-tested performance of Ethereum. That's what the strategy is based on. It's listed as one of the strategies on Gravity, so that's grvt.io. And you do need an access code in order to invest. So this is only available for the premium members. You can join premium for $125 per month. You can just sign up for a month, deposit your capital, and then let it run. And unsubscribe again if you do not like the other content of premium. So I very much like this strategy. I like to use data-driven approaches that historically worked well. And while there's no guarantee that if things worked in the past, that they will continue to work in the future, I think it's better than just using random guesses. I think it's better than just trading according to gut feel. If you got some value out of this video, then feel free to give this a like. It will help the channel grow. See you next time on YouTube or see you on Premium. Cheers!